Mortgage points, origination points, discount points. What are they? What do they cost? And are they even beneficial? Stick around, we're gonna be right back with the details. Hey there, this is Brandon Lewis with Integrity Home Mortgage. Thank you for stopping by today. Today we're going to talk about mortgage points and breaking down the costs. Are they beneficial? Getting into all the nitty-gritty there of points in the mortgage world. Now, before we do that though, click that subscribe button. Let's make sure you don't miss any great content going forward. Hit that bell as well. Want to make sure you get those notifications and give us a thumbs up. We always love any great feedback that we can. And as always, love to hear any video topic suggestions in the comments section. So love the support. Thank you there. And let's get on with the topic. First off, let's just get into the basics of points. There are two kinds of points when obtaining a mortgage. The first kind is called an origination point. Now, generally, you're not going to see a lot of companies charging an origination point, but you will see it with certain products. For example, long-term locks, some two-part construction to perm loans, some portfolio products that are held by the bank. So in those cases, you may see origination points on your closing call. Now, the other kind of points are what's called your discount points. Now, discount points are essentially prepaid interest to buy down your interest rate. So now we need to figure out, how much does a point cost? How much does it buy your interest rate down by? Is it even beneficial? You know, that's the key thing. Is it worth the cost there for you? So let's break it down real quick and get into the numbers here. Okay, so whether it's an origination point or a discount point, the cost of a point is always equal to 1% of the loan amount. So if you have a $200,000 loan amount and you decide to purchase 1 point, origination or discount, that's going to cost you $2,000 at the time of closing. If you bought 2 points, that's going to double it up to $4,000 due at closing. But again, now we need to look at how much does it reduce your interest rate by, and is it beneficial for you? Just to debunk a common myth real quick that's out there, and I get this question from clients all the time, but they'll ask, does 1 point reduce your interest rate by 1 full point? And the easy answer is no, unfortunately not. Typically, your first discount point will reduce your rate by 1/4 to 3/8 of a point generally. The second point doesn't mean that it's going to reduce your rate another 1/4 to 3/8 of a point. You may have less of an impact with that second discount point. So this is why it's critical to break down the numbers, work with a professional, and see if discount points are truly going to be beneficial for you, and how many if they are. All right, now we know what kind of points there are, origination and discount. We know how to calculate a point, 1% of the loan amount, not the sales price. So now let's look at how this impacts some actual loan numbers. Look at the savings, break those numbers down. So let's jump into a couple loan scenarios real quick. All right, so now I've got the numbers up. And this is a scenario that is based on a 30-year fixed rate mortgage with a sales price of $250,000, a $50,000 down payment, and leaving the client with a $200,000 loan amount. So keep in mind, the calculation for the cost of the points is always based off the loan amount and not the sales price. Now we're going to focus purely on discount points. Again, those are prepaid interest. It buys down your interest rate and serves a very useful purpose. Not that origination points don't. Again, they do serve a great purpose, but they are unique to certain products and different lenders. All right, so let's look at the first column on the left. This one is going to show you a no point option. So this is what we're going to consider the baseline scenario. We're going to calculate all savings based off of this 0 point option. So a 0 point option is generally what we're going to call your par interest rate. This is an interest rate that doesn't cost you anything extra, nor does it give you any type of a rebate towards the closing cost. So again, on a $200,000 loan amount, this is 0 points, so no cost for that at all. The interest rate's going to be 3.125 in this scenario, and your client's going to have a payment of $856.75 per month. Now again, this is going to be the baseline. We're going to compare these numbers to loan scenarios now using discount points to buy down the interest rate. All right, so in the center, we have your 1 point option. right? Now 1 point again is going to cost how much? $2,000 on this $200,000 loan amount. Remember, 1% of the actual loan amount itself. In this case, based on the same figures and factors as the previous scenario, but this time the monthly payment and the interest rate are going to drop a little bit because you're paying an extra $2,000 for a discount. So now instead of an interest rate at 3.125, your rate has dropped to 2.875, a 3/8 point reduction to the interest rate, and that's also going to reduce your monthly payment by $26.97. So the big question is, was the cost of $2,000 worth the savings of $26.97? So let's stay in this center column here. We're going to show you how we break this down to see what's beneficial or what would be best for you based off your intentions of this home and mortgage. All right, so what we want to do is we want to calculate the break-even period. How long does it take to break even from the cost of that point and to see the benefit of the point? That's the whole point, is to see the benefit there. All right, so in the center column still, the 1 point scenario, the 1 point has cost you $2,000. It dropped your interest rate to 2.875 compared to the 3.125 on the initial scenario, the baseline example. Your monthly payment is dropped to $829.78. That's going to provide you a savings of $26.97 per month over the entire life of the loan, all 360 months. So in this case, in order to break even, we just simply want to take what your monthly savings are and divide it into the cost. So simply, we're going to divide $2,000 by $26.97, the monthly savings, and that's going to be right at 74 months in terms of breaking even for the cost. So what does that really mean there? That means you need to stay in that home or retain ownership for a solid 74 months to be able to recoup that $2,000 expense. If you were to move out before that 74-month period, that point wasn't so beneficial then, and you paid some money up front that you probably shouldn't have. All right, so moving over to the right-hand column, far right now, we're going to look at the 2 point scenario. So it works the exact same way as the center scenario as well. So in this case, we're just gonna double it up. Let's go for 2 points. On a $200,000 loan amount, that's going to be $4,000 now. So now we're paying $4,000 and our interest rate's going to drop to 2.625. Again, that's compared to the original base scenario of 3.125. Now, with this rate reduction, your monthly payment's going to drop to $803.30 a month compared to the $856.75 payment on the base scenario there. Now we're talking about a monthly savings of $53.45 a month, again, over that 30-year term, all 360 months. Now, in this case, the far right scenario, the 2 point scenario, is going to save you $53.45 per month. And again, doing the same calculation, dividing the savings into the cost of the point, will show that we're still going to break even at the 74-month mark. So what that tells us is you do want to stay in that home for at least the 74 months so you can recoup the cost of the points, but you really want to stay there beyond that so you can see the benefit. Statistics say you won't have this mortgage for 30 years. You know, life events are going to happen. You may marry, job transfer, whatever it might be, but you may be at some point in time forced to sell that home, to relocate again, or whatever it may be. Or even if you stay in that home, retain ownership, you're going to refinance that property over time. I just say that based off my own experience of 20 years in the industry. I'm going to reach out to you and advise that you do refinance. Sometimes it's great if we can get in there, get you a little bit of a lower interest rate, cut several years off the life of the loan, and save you some serious money by doing a rate and term reduction. Like I said, unlikely that you'd hold this 30-year mortgage for the full duration, and that's exactly what these total savings are based on. So a lot of times we may recommend one discount point, but we really need to break down those numbers, compare those with your goals to see, does it make sense? Is it beneficial for you? And if so, what do the numbers tell us? How long do you need to be in the home for, and how much are we really going to save? Now, if you have any questions based on the calculations below or the numbers that we just reviewed, or exactly how we get to the break-even figure, hit me up in the comments. Love to break it down for you, show you exactly how all this works, and we could potentially apply it to your exact scenario as well. All right, quick recap. So today we discussed mortgage points. What kinds, origination and discount, how to calculate the cost, how to calculate the break-even point to see if the point or the discount point would be beneficial for you. Keep in mind, you don't want to just go and spend several $1,000s on points just to buy down that interest rate if you know you're going to sell the home in, say, 3-4 years. Not going to be worth it at that point. So, as I always recommend, it's extremely important to always work with that professional that's going to look out for your best interests, going to listen to your goals and actually put numbers together in line with your goal. All right, you made it this far. Let's hit that subscribe button. Also click the bell as well so you're notified of all our upcoming videos coming out, and give us a thumbs up as well if you like the content you're hearing, and again, put any suggestions in the content box. This is Brandon Lewis with Integrity Home Mortgage, and I'll catch you on the next mortgage tip.